Warren Buffett bought AON Insurance. Should we follow him? And with that, welcome back to Investing for Generations, your channel for high quality stock research for a long-term value investor. So Berkshire last week reported their 13F filing, where you find all the buys and sells in the Q1 of 2021. And once again, Berkshire was a net seller of equities in Q1. But next to that, they sell Wells Fargo and Chevron and a lot of other stocks. Berkshire Hathaway also take a big stake in AON. Every time when Buffett buys something or Berkshire buys something, then it's time to take a deeper look into the company, into this transaction, because it could be very interesting. AON, now we see here, Berkshire bought around 4 million shares, and it's now 0.3% of the whole portfolio of Berkshire. It's interesting, and I want to take a deeper look there. So AON is a professional service firm, provides advice and solutions to clients focused on risk, retirement, and health worldwide. It offers commercial risk solutions, including retail brokerage, cyber, and global risk consulting solutions, as well as acts as a captive insurance solutions provider and health solutions such as health, benefits brokerages, and healthcare exchanges. It was founded in 1919. So very old company and basically an insurance broker. AON right now is traded at $252 with a market capitalization of almost 57 billion, a PE ratio of 27 and a forward dividend yield of 0.8%. And as we can see here on the chart, the stock price just took off over the last while and now just go up to 252. And the question is, why Warren Buffett buy into a company where the price went up already so much? And to find an answer to that, as always, I go to macrotrends.net and want to go through the most important financial numbers of AON and start with the revenue. The revenue over the last 5 years grew from $8.9 billion to currently $11.3 billion. So not very much, but slow and steady. The earnings per share went up over the last 5 years from $4.93 to currently $9.16. So more than a doubling in 5 years, and especially here since 2018, 2019, it really took off. They work on good margins. The net margin currently is 18.55%. And also here it went up a lot over the last few years. The return on investment is 19%, which is quite good. And also here they just found a way to rise also the return on investment quite a lot from in 2018 just 7% to currently 19%. And what's really impressive is the return on equity with 55.3%. Also here, very positive. 3 years ago, they just was around 20% or even under 20%. So also this looks very good, and the return on equity of 55% is really impressive. And also the free cash flow over the last 5 years just grew from $6.41 to currently $12.48. And also here we see in 2018, 2019, they just cut the corner and was able to generate a lot of cash flow over the last years. And when we look at the debt equity ratio, look at the balance sheet, then we see that the debt equity ratio is at 1.67. This is not what I like. When you follow me for a while, you will know that I like my debt equity ratio under 1. But anyways, this is not a big thing, I guess. And so overall, a very high profitable company, as always with Buffett, or normally with Buffett. When you look at the growth, especially the revenue growth, it's not impressive. Overall, I would say a good profitable company. Of course, when Buffett invests somewhere, the big question is also, what's the price? AON really performed very well over the last few months, the last few years. Now we are trading at $252, and when I calculate the intrinsic value of AON, then I come to an intrinsic value of around $210. And so For me, with a discount rate of 12% or expected return of 12%, AON seems overvalued for me. And so it's not a classical Buffett investment where you find a bargain somewhere down the road and then buy into it. And the question becomes, what's the reason? What's the special thing here with AON? When I researched, I found out that AON will merge with Willis Towers Watson. And then when we look at the biggest insurance brokerage companies in the world, then we see at number one Marsh & McLennan. Marsh & McLennan, also another stake in the Berkshire Hathaway portfolio. And then we find AON and Willis Towers at second and third place. And with this merger of AON and Willis Towers Watson, they will become the biggest insurance brokerage company in the world. And this, of course, is a real news. And it will become the largest ever insurance merger. And so let's also take a short look at the Willis Towers Watson. And we see Willis Towers Watson right now is traded at $261 with a market capitalization of $33 billion, a P ratio of 24, and a forward dividend yield of 1%. And so the question is it maybe a very smart move? And should we follow him? Should we follow Warren Buffett with AON? And I'm not quite sure with that. I think we can't compare with Buffett, obviously. At least he have a little bit more money, at least than me. When I look at this deal, I think this is really kind of a special deal and nothing we should follow, or at least nothing I will follow. I think it's more a strategic move, because when AON and Willis Towers will be the biggest insurance brokerage company in the world, and he also have his stake in Marsh & McLennan, have really a good position in this market and have a stake in the biggest three insurance brokerages. And this, of course, could have some synergy effects, because don't forget, of course, Warren Buffett and Berkshire Hathaway owns Geico, the big insurance company. And I'm not good enough in this business, but it's very simple to imagine that there could be some synergy effects between insurance company and insurance broker. So I think this is a strategic move and not necessarily one I will follow, at least not to this prices. As I said, AON seems very good, a very profitable company, but just too pricey right now for me. And so it doesn't fit into my real money portfolio, even if I also own insurance companies. I own Allstate and Progressive. You see this here in my portfolio, and you also see the rest of my companies in my portfolio. And by the way, if you're new to my channel, you find deeper analyses to all of these companies on my channel. And there I go through these business models, analyze the businesses, and I explain when and why I bought. So feel free to check this out, and if you find any value in this video or on the other videos, please like, share and subscribe to my little channel and help me to grow this channel and follow me on my road as a long-term value investor. That's it for today. If you like the video, subscribe to my channel, ring the notification bell, and then we see on the weekend with my weekly insight to my real money portfolio. See you then. Take care. Bye bye.